Hey everyone, it's Blair here at Time Trades. Welcome back to this weekly video. Today is Sunday, May 7th. I skipped last week's video for personal reasons. I was traveling, and so this is the first video in 2 weeks. So the last video I did is marked here on the chart, and we're going to start as usual by reviewing what's happened in the last 2 weeks since then. And this is where we left off. Basically, I left this yellow arrow here and showing our anticipated path of price. But at the same time, I also mentioned in the last video that there was room to correct from prices where they were back in this area here, 13,100 or so. So since then, over the last 10 trading days on the NQ futures, we have followed that forecast actually pretty well. We did get a bit of a correction here, and then we did land up here in the green target box, pretty much dead in the middle of it. And so I'll give myself an A- on this one, I guess. You can see the green target box down here where I thought we would correct back about a month ago. We never got close to that. I think the logic behind this lower green target box still applies, and I'll talk a little bit about that later in the video. Okay, so that was all a very good forecast. One of the things that was left behind is we ended up with the prices at the lunar eclipse being higher than prices at the solar eclipse. So if we go and turn on eclipses here, so we can see here we had the partial lunar eclipse on Friday with that very strong close on Friday, and that's certainly above where prices were at the total solar eclipse on April 20th. Now, I like to look at price behavior during eclipses, as I mentioned on a prior video, because they are periods of balance between the sun, moon, and earth. And the state that we're left in is actually a bit of a bullish state, because we did get the second eclipse higher than the first eclipse in terms of price. And I went over historically what happens when in the past when that happens, using the feature in Time Trades called eclipse season, which you can turn that on and you can see the period where the pairs of eclipse happens. So in that most recent eclipse season, we did end up with the second eclipse higher than the first. So that has some bullish implications. Now, that being said, there's still an awful lot of negative sentiment out there. The news is bad. Earnings are coming down a little bit. Earnings growth isn't where it used to be. Interest rates are high. So on the surface, there's lots of reasons to be bearish. But that being said, bears got burnt on Friday pretty severely. So in situations like this, I like to go back to first principles, square the chart, take a look at the Gann Fans, and really sort of think about and take advantage of price and time equivalence to take a look at some of the patterns that Gann made famous and that Jenkins continues to use in his analysis. So those are certainly two big influences in my work. So I want to give them credit and also show how you can do this yourself using the tools in Time Trades. So let's start by building our new forecast here. And well, we're going to make sure that our chart is squared, and I want to make sure that everyone is aware of what that means and how easy it is to do in Time Trades. So when it comes to squaring a chart, the way you can use Time Trades to do that quickly and easily is you can turn on a feature here called Gann Fans, and one of the things you may be overwhelmed a little bit with all the lines that appear on the screen. And trust me, that's a feature. It's not a bug. And the reason it's a feature is it lets you change the price axis. So if you click and hold and drag on the price axis, then really what you're doing is you're changing the aspect ratio or the angle between price and time, so that these lines here that emanate from key pivots touch at important points in the chart. Okay, so I do have a video that goes into detail on this. I'm not going to reiterate all of that here. I will include it in the comment section below, so that if you're interested in learning how to square your chart using time trades, you can go ahead and watch that video and learn how to do it. So let's switch back to TradingView here. We've got our NQ futures chart, which is kind of the basis of our forecast, and this is squared already. So this is set to a fixed relationship or fixed aspect ratio between price and time. So this lets us do some analysis using Gann Fans here. So what I'm going to do, just to keep the chart clean, I'm just going to turn off time trades. Okay, and I'm going to turn on our Gann Fans. So if we go down here and turn that on, so these are Gann Fans that are anchored to major highs and major lows. And the simplest way of interpreting these is above the 1x1 is bullish, below a 1x1 is bearish. And you can see how there's this confluence of Gann Fans here in early April that acted as resistance. And we have been able to push above this cluster of fans here just last week. Now, you might look at this and say, okay, well, there's lots of room here above to push up. And obviously that's true. However, there's also other ways of using Gann Fans, and I do want to turn on the magic levels from time trades, because that does show an area of resistance as well here up at 13,400. So that tends to be a major level that if it can push through, then indeed it may be able to push all the way up. But there's another way to anchor your Gann Fans. You don't have to anchor them to highs and lows. I've also anchored them to Mars cycles, Mars being a very influential planet in financial astrology. So let's take a look at those. And I've showed this before on this video. These are the green lines here are 1x1s from key points in the Mars orbital cycle. And we get a little different look here. So we do have a Gann Fan coming down. This, I think, is a 3x1, sorry, 1x3. So 1 unit of price, 3 units of time. And that's coming down from a prior point in Mars, in the Mars orbital cycle. So we're still above these 1x1s here, which is bullish. However, and you can sense a but coming in my analysis here. The but is we've seen this cross in these two EMAs, and these two EMAs are very influential. They're pulled from Matt at Inside the Candle. This is the fast one is the 103 EMA, and the slow one is the 144. And one of the interesting behaviors of these is after they cross, often there's a retest of them. Okay, so these crossed way back on April 4th. Okay, and there hasn't been a retest of these at all. So these are down here like 12,500. All right, so that's one argument in favor of at least a temporary correction down into this area. The second argument is something that I'm going to build towards using price and time equivalence. Okay, so once we have our chart squared properly, let me just turn off some of these labels here. We don't need eclipses anymore. once you have your chart scored properly, then you can do some very interesting things. And this is something that Jenkins always reminds us of, is that price and time are equivalent. So how do we measure that? How do we take advantage of that? Well, we can do things like take advantage of we can use the geometric shapes like circles that will, if I can find the circle here somewhere, here we go. So we can take advantage of price and time equivalence using the circle as a shape. So the radius, if you drag a circle on a properly squared chart and drag that out, then the radius is basically the price time vector, and anywhere along the perimeter of the circle is equivalent because price equals time. And when you do this, you can see some interesting scenarios happen. Like at the edge of this circle, this would be kind of a square out, or the end of this price time equivalence. And that's very close to a pivot high here. So let's do this again, except centering the next circle over here at the bottom in October. Okay, so we can drag that out and we can put that over there. And if we move our mouse over to the perimeter of that circle, we get a square out on February 3rd, which is one day after a significant high on February 2nd. Okay, so let's keep doing this. And one of the things you'll notice is the circles keep getting smaller. So this is really interesting because it tells me that things are getting coiled up a little bit. Energy is getting compressed. And we're getting into a position where we could see a big move. So if we do this here and here, now we see the edge of this circle, price time equivalence, hitting on the 14th of April. Okay, and that's not a high, but very close to a high, and it finished with quite a strong bar on the 13th of April. So let's zoom in a little bit again and keep doing this and see what we find. So we can go over here to March 13th and drag it up to April 4th and do the same thing, coming back again and get a new pair of circles. And we get an edge of the perimeter right here on May 23rd. Okay, so that's one interesting date. If we do the same thing on this smaller move here, this most recent move up from April 25th, and we can, if we move it up to, I think the current high is here on May 1st, and then drag it back. Let's see what happens. And we get the edge of that circle on May 17th. All right, so we've landed on a very interesting date range here. And if you notice, I know there's a lot of green on the screen, but it's very close to where these one-by-one lines cross. And that was something that Gann taught, is that be very aware of where your one-by-ones cross, because often there's big moves and completions of major cycles at that point. Okay, so we've got our interesting date range here, kind of from the 16th, where the one-by-ones cross, out to the 23rd of May. So let's flip over to time trades and see what that is telling us could happen around those times. So if we flip over to time trades, we can turn off Gann Fans, and we can move forward in the future. And what we're seeing here, I'm just gonna go into automatic scaling. And what we see here in the cues is kind of a cluster of red around June 1st. Okay, so one of the things we know to do is understand that these probabilities of move down also have a chance of inverting. They could also be moves up. So let's see what happens with some of the other symbols. This is the NASDAQ 100. So we'll turn off Gann Fans here. Do we have something similar? Yes, we do. Right around June 1st, we've got a little splash of red there and some low probability pivot lows around June 7th. So this is telling us that, yeah, it's possible there could be a move down in that peaks in early June. Let's take a look at SPX. There's something similar here. We've got pivot lows around May 18th, 19th, and then pivot lows around June 9th with another big red bar around June 1st. So that is in line with what we're seeing so far. How about the Dow? So the Dow has got increasing probabilities of red, reasonably high on May 30th. So what we're seeing is a bit of a consistent pattern here. The Dow is probably a bit more bullish than some of the others because there is a few days of positive green probabilities here. So if you're looking at this as well and you're following along on time trades, you'll notice we have the mass pressure index daily as well. And this is based on Venus cycles, okay? And one of the things to know about Venus is its orbit is about 225 days. So what we've done is to calculate the mass pressure index is we go back, I think it's 6 orbits, and aggregate the prices there. Now, if you know how to use a calendar, you'll know that 2 of those happened after the all-time high, and the others happened before the all-time high in the COVID pump. So what we're seeing here is kind of an aggregate of pre-all-time high bullishness and post-all-time high bearishness mushed together, and that's creating this this aggregate cycle here. So that's something to be aware of just in terms of how this is calculated. All right, so if we go back to TradingView, we're going to update our forecast here. And one of the things that we learned by looking at time trades is that there seems to be a confluence of dates in early June that could indicate a low. So I'm just going to unhide the latest forecast here that aligns with that. And the rationale for this is it feels to me like we'll continue to chop higher. We don't really see a lot of reason for a big push down until we get to the 16th, 17th of May. So I'm going to draw this kind of green target box over here a little bit. That being said, we're getting pretty late in the cycle. Where the cycles are getting shorter and shorter because you can see the radius of the boxes are getting, or the radius of the circles are getting smaller and smaller. And I'm expecting a bit of a choppy move up into this green box here. I do think that the combination of the magic level and this descending 3x1 is going to create some strong resistance here for price. And then we see the combination of the crossing of these Gann fans plus the square outs of these circles take effect. And we're also looking at the time trades forecast for a move down into a low in early June. So this would of course tag the square of 12 EMAs, and we would get that we would get that retest of those, and then I think that would set us up for a good bullish move later in the year, because I think all the bears would get excited and load up on puts, which of course is rocket fuel for a bullish move later in the year. Okay, so that's the updated forecast. I'm probably overloaded your screen with green at the moment, so we will turn off some of these circles here before we move on. But now you know the logic and the rationale behind this. As always, it's just a forecast. You still have to trade price, so make sure you're trading safe and using stops and managing risk and all that good stuff. Okay, so we can do a quick update of Fed liquidity. Fed liquidity is no longer bullish the way it was back in mid-March. It's back down into kind of recent ranges that we see that we saw being established in kind of the September to December range. And also a quick view of breadth. If we look at breadth here, the McClellan summation index remains red. Friday, we got a pop up into green territory of the McClellan oscillator. Price remains at resistance here. So I don't see a huge divergence, I guess, in breadth at the moment. I guess the general observation is that we still see a pattern of higher lows in the McClellan summation index, which is mildly supportive for price. It's more visible over here in the ES, where we see the McClellan summation indicator made a low at in late March, and then now we're over here at a higher level, even though price has gone up just a little bit. So that's the breadth interpretation. And yeah, so I think that completes the new forecast. Let's go on and take a look at crypto, gold, and the Nifty. So if we go and take a look at time trades over here, we'll do a quick tour of those. Let's look at Bitcoin. So this is Bitcoin with the Gann Fans turned on. And one of the things that gives me confidence in the stock forecast is I also see it in Bitcoin. Even though the two have decoupled, they still kind of directionally align. So we see a cluster of red starting around May 19th, and we see a fairly confident 57% pivot low around June 2nd. Okay. And then after that, we see big clusters of green in late June and July. Okay, so Bitcoin looking in general like it's going to continue to chop upwards into this key date range of May 17th, 18th, 19th. And then it's likely we'll see this pivot low start to pull it down a little bit. Okay, what's next? Let's take a look at Ethereum. Ethereum's a little bit more dramatic, but we do see higher probabilities of moves down. Now these are peaking around May 17th, so that again, keep in mind there's a possibility these could invert. And also we do tend to get big moves on the backside of these as well. So one scenario could be is that Ethereum inverts, moves up into May 17th, and then moves down into this pivot. So one of the things you need to be aware of is when there are contradictions in these directional forecasts, you need to try to anticipate those. So that's why you always need to keep a close watch on price. Okay, let's take a look at the metals. Gold looks pretty bullish right now. We do have a nice little cluster of green probabilities of moves up in the 16th, 17th, 18th, 19th range. Again, that same date range starts to pop up again and again. So this is further confirmation of the importance of those dates. And then we're looking at a possibility of a flush down late May, pivot high, early June, flush June, flush late June, and then another pivot high June 29th. So keep this in mind. Gold is certainly the most bullish it's looked in many years right now. That being said, it looks like there's some, if you're smart about it, if you're strategic about it, you can still get some good entries here on the long side. Let's take a look at the Nifty. All right, Nifty looks actually quite bullish. We do have to get past this little cluster of red here that ends again May 19th. But then after that, we've got a very nice cluster of moves up throughout late May, June, and July. So I do like the looks of that on the Nifty. As long as it can stay above this Gann fan here, this 2x1 down, then it would continue to be in a bullish configuration. And as long as it stays within sort of these Gann fans that where my mouse is right here on the upper and the lower side, then I think it could certainly push up. And I'd love to see it push up into the 19,000 range and exceed this upper Gann fan, which is a 2x1 up from the low on June 17th, 2022. Okay, so that's it for me. I hope you learned something from this week's video. Good luck trading this week. Trade safe, and we'll talk to you again later. Thank you. Bye now.